All right, let's dive right into this explainer and look at the unprecedented financial mechanics behind the upcoming launch of Grand Theft Auto 6. We really aren't just talking about a standard video game release today. We're looking at what could very well become one of the most important financial events in modern entertainment history. If you strip away the trailers and the internet memes, the business story underneath the surface is absolutely fascinating. Take-Two Interactive has placed a massive bet, and to truly grasp the scale of it, we need to follow the money.
So, Section 1. The billion-dollar contradiction. Let's look at demand versus forecast. Normally, when a highly anticipated product hits the market, a company is shouting from the rooftops about how much money they're going to make. But, well, that's not exactly what's happening here. When Rockstar Games opened pre-orders for GTA 6 on June 25, 2026, the response was immediate. Parent company Take-Two reported that demand was unprecedented, with CEO Strauss Zelnick officially characterizing the surge as beyond anything they'd ever seen before. The early money is definitely flowing in.
But here's where things get super interesting. Despite that historic, record-breaking pre-order hype, Take-Two's financial forecast for FY 2027 remains completely unchanged. This is highly unusual. The market is practically handing them a golden ticket, proving that players are desperate to buy, yet the official financial guidance provided to investors hasn't budged a single inch.
Which brings us to our central mystery for today. Why on earth would a company sit on record-breaking demand and stay so cautious? If pre-orders are truly unprecedented, why isn't management updating their forecast to reflect a massive, unexpected windfall?
Let's move to Section 2. Unpacking the financial hype.
To really understand this caution, we need to establish the strict financial guardrails Take-Two is managing right now. Let's start with this. For the first quarter of fiscal year 2027, Take-Two reported a massive $1.39 billion in net bookings. That's just a quick reminder that Take-Two is already a giant machine humming along beautifully before a single physical copy of GTA 6 is even delivered.
And then you add the staggering momentum of their previous game, Grand Theft Auto 5. By August 2026, GTA 5 crossed an unbelievable 230 million copies in lifetime sales. It somehow remained commercially relevant across 3 entirely different generations of consoles. I mean, that is the staggering pedigree that GTA 6 has to live up to.
Because of that massive pedigree, management is projecting a massive leap, from $6.72 billion in FY 2026 net bookings all the way up to an $8 to $8.2 billion outlook for FY 2027. Just think about that difference for a second. They're expecting a record financial year, driven heavily by the release of this new game.
But we have to be totally clear on a crucial fact here. This $8 to $8.2 billion guidance isn't just for GTA 6. It's a company-wide forecast. It includes their entire massive portfolio, from 2K games like NBA 2K to the mobile gaming giant Zynga. GTA 6 is absolutely the growth engine, but this multi-billion-dollar outlook rests on the shoulders of the entire company performing.
Section 3. The decade-long ecosystem. What happens beyond launch day?
You see, the real secret to Grand Theft Auto isn't just day one sales. It's what happens over the next 10 years. Just look at how Rockstar kept a game relevant across a full decade, leading right up to GTA 6 launching on November 19, 2026 for PlayStation 5 and Xbox Series X and S at $79.99. That entire gap from 2013 to 2026 was dominated by the GTA Online ecosystem. It fundamentally changed their business from a one-time transaction to a persistent, living world.
Because of that persistent world, that $80 launch price is actually kind of a distraction. Wall Street knows customer B, who enters the long-term online ecosystem, is infinitely more valuable than a one-and-done buyer. Customer A buys the game, plays the story, and puts it on a shelf. But customer B? They subscribe to GTA Plus, buy digital goods, and participate in every single update. The ultimate question isn't, how many copies did you sell? It's, how much is a player worth over a lifetime?
Get this, recurrent consumer spending. So things like subscriptions, digital content, and microtransactions made up an incredible 84% of Take-Two's net bookings in Q1 FY 2027. Initial game purchases only made up a fraction of their booked revenue. This really proves just how reliant the modern publishing model is on keeping players inside an ecosystem long after the launch hype fades.
Section 4. Hype versus revenue reality. Let's talk about pre-orders. Now we have to separate the early hype from booked revenue reality, which brings us right back to why Take-Two didn't raise their $8 billion guidance. The journey from a June 25, 2026 pre-order to an actually booked sale relies heavily on final conversion.
A pre-order is basically a raised hand, right? It's a sign of extreme interest, but you cannot book a raised hand as guaranteed revenue.
Management hasn't raised guidance because a pre-order might just mean a guaranteed day-one customer is buying early, not a sign of a larger overall player base. And players can always cancel. If someone was always going to buy the game on November 19th but put their money down in July instead, Take-Two hasn't magically created new demand, they've just pulled an existing purchase forward. So until those sales clear, management has to stay incredibly disciplined.
Moving on to Section 5. 2 different launch scoreboards, players versus Wall Street.
That brings us to a really fascinating reality. On November 19th, there are actually 2 entirely different scoreboards judging this launch. For players, the criteria is all about the creative world Rockstar has built. They're looking at the map size, the fluidity of the mechanics, the characters, and whether the story delivers that classic cinematic punch. This is the creative scoreboard.
But for Wall Street, the scoreboard demands way more than just a good game. Investors want massive net bookings, long-term retention, and a booming online economy. They want to know the exact margins and engagement metrics. They're watching exactly how effectively Take-Two is turning millions of day-one players into years of recurring consumer spending.
Wall Street evaluates this at such a high level because modern publishers need these astronomically expensive games to act as decade-long platforms. Development cycles have stretched out so far, and marketing budgets are so incredibly vast that simply selling a game once is literally no longer enough to satisfy the public markets. The product must become a platform.
So the real financial event actually begins when Take-Two attempts to convert that initial purchase into a 10-year customer relationship. First, they have to convert the hype into an $80 purchase, then convert those buyers into an active community, and finally, convert that community into years of recurring business through a thriving online ecosystem. That is the true billion-dollar bet.
Which leaves us with this final, somewhat provocative thought to take away. When expectations are built on a decade of hype, 230 million copies of a predecessor, and an $8.2 billion corporate projection, is it possible for one of the greatest games ever made to still disappoint investors? I mean, even if it sells tens of millions of copies, if the ecosystem doesn't hold, the financial narrative changes completely. Everyone is waiting to find out how good the game is, but Take-Two is waiting to find out exactly how valuable it becomes. Thanks for joining me on this explainer, and definitely keep an eye on how this incredible launch unfolds.